us. Uh, we're going to go through a session of about 1 hour of understanding cargo claims and taking it further. This will, as a logistics service provider, it's very relevant that we understand the process of managing the claim. We may not handle the claim ourselves, but it's very important for us to manage a claim. And thanks very much for joining us in the office. I will now hand it over to our chairman, Dushyant Mulani ji, to share a few words before we start the session. Dushyant bhai, over to you. Just wait for a second, everyone. Yeah, please log in. Sorry, Chairman is having some technical issues, so just give us a couple of minutes. Before we start, may I request Shankar bhai to share a few words of advice?
Thank you, Tej. Very good evening, good afternoon. My dear friends, one of the most important aspect in our industry is the security, safety. And from that perspective, we always take precautionary measures. And one of the precautionary measures is the insurance. And we take it for granted rather. It is never a seriousness, we look into it. And that is where we found that there are majority of the claims, liabilities being increased by the forwarders and the owners of the company. And it doesn't stay limited to the organization or the company. It extends to the individual liability also. And such risk coverage requires some knowledge, some important things to be noted, and hence it becomes a security for a business also. Going in the long term, I think so, all such precautionary measures require standardization, require some SOP to be followed. And what are those SOPs and how you can mitigate this? I don't say that you can 100% get the coverage, but at least you have somewhere leverage to play to mitigate this to a certain level where it gives you a sustainability for the future business. And we have expert from the industries, Ms. Lina here, and Ms. Lina is expert into this insurance and also on the underwriters and how to address such issues and what are the precautionary measures we should be adopting to have this executed. With this, I would leave it to Lina rather than me speaking too much to take it forward and give us the insight on this insurance. Before that, we have chairman to come in, Mr. Dushyant Mulani, our chairman. Otherwise, we can start with this seminar. We start Lina, and then we can just catch up with that. Yeah, thanks, Lina. Over to you, Lina. Thanks.
Thank you so much for board of the Federation for organizing this masterclass on a hot industry topic. And thank you everyone who joined this masterclass in person and online. The goal of this masterclass is to help you as a freight forwarders, general cargo, reefer cargo, to be more vigilant and to know what to do when a cargo is damaged in transit, with the goal to help maintain your financial exposure.
You go to you share
So,
it. You have shared it. You have not shared it. You need to share it. Once. Escape kar. Escape 1 second. Escape kar. Tap kar. All tap kar. The share kar. Share screen. Do the share screen. Lina, the share screen.
yes.
Yeah. And then you go to the share screen. And then you go to the now you get it. Yeah. No, click on that. Click on that. Yeah. Good. Go ahead. Share it. Thanks.
Yes. So I think everybody now sees our presentation. Today we'll discuss 4 biggest myths in cargo claims that cost thousands of dollars for Indian freight forwarders. This is an interactive session. If you have any question, please type in a chat and we will answer later. And if anyone in person has a question, feel free to interrupt me anytime. I will answer. So why me is the subject matter of this topic. Before founding Recupex, which helps freight forwarders and cargo exporters globally to recover cargo claims from shipping lines, for over a decade, I worked for one of the biggest shipping lines, and my job was not to pay cargo claims. I was in charge of Africa and South America region for all cargo claims. Also saw many claims Indian exporters face, and the hardest part of my job was to witness how many exporters and freight forwarders do not know how to defend themselves when a cargo is damaged in transit. There are a lot of questions, uncertainties in the process, and oftentimes the blame for the damage is pushed on the weakest parts in the transaction, freight forwarder or exporter. So I was so good at this job rejecting and not paying cargo claims. So when I left MSC, owner of the company sent me a handwritten letter. So it means I did a good job for them saving money. But since then, Recupex all what does is to help exporters and freight forwarders raise awareness so you never ever have to absorb genuine cargo claim again. Agenda for today. We will discuss global cargo claims recovery landscape. We will delve into 4 biggest myths of cargo claims that freight forwarders in India still believe it is true and which cost a lot of money. And then we will cover best practices, how to save costs on cargo claims and mitigate financial exposure. Here is industry statistics. For general and reefer cargo, 1 out of 10 containers in transit is damaged. 8 out of 10 containers for a damaged cargo, these claims are rejected by shipping lines for various reasons. And only 1 claim out of 10 is settled by shipping lines at the value of 15% of original claim amount. So you look at the volumes you ship, your exporter ship, and you have a very good number of a susceptible damage which industry face. What are the economics behind cargo claims? So first of all, exporters do not have a profit. If 1 container of bananas it's worth $25,000, or a container of rice worth $20,000, it is damaged, total loss in transit. Several container damage for smaller exporters can wipe season's margins. Due to damaged cargo overseas are lost contracts. Exporters incur additional cost, brand damage. If they have insurance premiums increase due to payout, and if they don't have insurance, they have direct losses. Let's touch a little bit on global export business landscape. So this year, freight rates continue to increase. Equipment shortage for cargo out of India still persists, and exporters face excessive transit times. Insurance premiums for a cargo increased during last 3 years, and global market does not see a positive outlook for the next year. It means every year, cargo insurance costs more and more. Exporters' margins are thin, and business strategy, not only for Indian exporters, but for exporters globally, is to recover losses from every genuine cargo claim where it is possible. So exporters are coming aggressively for cargo claims recoveries. A recovered cargo claim help unleash trapped cash in cargo claim, help maintain loss ratio for insurance premium, and overall works positively for operational costs. What do we see on freight forwarding side? Freight forwarders in India, due to very high competition, have started actively helping exporters to pursue cargo claims recoveries against liable sea carriers, also inland carriers. We see increased interest from exporters to upskill their teams, improve loss prevention ratio, and recovery chances. This has been never the case before or several years ago, where the single focus was only to increase export cargo volumes. And cargo claims recovery support from freight forwarder is a value-added service to exporters. It does not necessarily turn into additional income stream immediately, but it helps a lot to maintain exporters, because freight forwarder who helps collect documents, who guides exporter in terms of when cargo is damaged, gives extra service, and exporters are more likely to stay. Now let's talk about existing risk, financial risk for every freight forwarder. So those freight forwarders who ship cargo under their house bill of lading, legally they are responsible to exporter for cargo damage. Because in a house bill of lading, freight forwarder becomes a carrier, and exporter has a legal right to claim for a damage from them. Freight forwarder who issues house bill of lading is responsible also for a shipping line, because he bears the same rights as shipper and receiver to the shipping line. Freight forwarders who accept bookings, who act as a booking agent, but they do not issue house bill of lading, their responsibility is limited to shipping line only for the cargo damage, for abandoned cargo cases, or for misdeclared cargo. So they still carry risk in terms of cargo damage. And in the cases of abandoned or misdeclared cargo, freight forwarder to shipping line has all the responsibilities of shipper or consignee, including they are liable party to go after cost recovery. So as you see, freight forwarder is really in the middle and really exposed to financial losses when cargo is damaged in transit, or when we face abandoned or misdeclared cargo issues. What can we do? Freight forwarders have been looking for various solutions, employing various strategies, but let's discuss the biggest myths which they still do today, which cost them the most. First myth or mistake that freight forwarders in India still do today is telling to their exporters that it is always shipping line's fault, that I do not have containers, I do not own vessel, it's not my responsibility. Go dear exporter and do whatever you want with your cargo claim. Regardless of the fact if freight forwarder issued house bill of lading or acts as a booking agent, we saw that legal framework still impose on the freight forwarder liability. So this myth is not really true, and freight forwarders who want to stay in the business, they should not shy away from helping exporters in case of cargo damage. So we understood already the responsibility framework. Freight forwarder who acts as who issues house bill of lading is a carrier to their exporter. So they have legal responsibility to pay claims. Freight forwarder who acts as a booking agent, they carry all rights to and responsibilities to shipping line. So that's why they are financially exposed as well. Our solution is, and what we have seen working in the market for freight forwarders to protect themselves from financial exposure, is to assign your recovery rights to exporter to pursue liable shipping line directly. How does it work in practice? In practice is freight forwarder receives a cargo claim from exporter. And they tell usually to exporter, we will solve with shipping line, we will submit your claim. Usually freight forwarders do not have cargo claim knowledge. And sometimes they assign import clerk, sometimes customer service person to communicate with shipping line. Usually these claims end up nowhere. Freight forwarder cannot offer solution for exporter, which builds up and aggravates exporter further because they do not have a resolution and claim payout. We recommend freight forwarder to provide contacts and letter of assignment to exporter to pursue specific carrier directly. Second mistake. Freight forwarders believe that if they have liability insurance, they are covered. The issue with liability insurance is that it is extremely expensive. It has multiple exclusions, and after single claim is paid out by liability insurer, insurance premium skyrockets for the next year. So freight forwarder is really exposed to settle every claim via their liability insurance, and financially this action plan is not sustainable. We recommend to freight forwarders to have their liability insurance and to keep it only for very big claims, volume claims, general average claims, multiple containers on board of vessel damage, but to look for cargo claims recovery solution elsewhere, outside of your liability insurance coverage, such as assigning claim recovery right to your exporter directly to pursue actual shipping line. Number 3 mistake, which Indian freight forwarders still do, is asking exporters always to have cargo insurance, or believing that exporters' cargo insurance will always pay their claims. As all of us are aware, most exporters are unorganized. Most of them, they do not have insurance. This is the reality. And those who have insurance, they do not have documents to make insurance claims successful. That's why to rely on the fact that all exporters have insurance and they never come with cargo claim against freight forwarder is a huge mistake, and we see this happening ever and ever again in practice. Instead, what do we recommend? We recommend that freight forwarder, at the time they accept booking from every exporter, they share a claim document checklist. So these are documents, what needs to be submitted in case one day your cargo is damaged. So you can pursue a claim against liable shipping line successfully, or you can claim from your insurance company successfully. So this is a list of the documents such as pre-shipment survey, pre-cooling evidence or staffing evidence if it is general cargo, harvest certificate, damaged cargo evidence, pictures, survey report. This list helps manage exporters' expectations. So when cargo is damaged, exporter knows they need to have those documents in order to pursue their cargo claim successfully. It also sets the standard of communication between exporter and freight forwarder, because freight forwarder will no longer entertain empty, unfounded cargo claims from the exporter side. Very simple examples how pictures can look like taken with iPhone, no sophisticated technology needed. Pre-shipment, cargo, damaged cargo evidence. Here we see a coffee, pre-shipment at the loading and at the discharge weight bags. It's fully sufficient to prove that cargo was damaged. Another mistake, not the least but last, is that freight forwarders don't spend enough time to carry KYC on their exporters. They usually believe that we are in business for many years. I know parents, I know grandparents of exporter, and these are genuine people. I believe that they ship good cargo, they do everything according procedure, and they don't do basic check to ensure exporter complies with cargo description at the time they manifest cargo. They are in business with genuine receivers, and this prevents from abandonment or misdeclared cargo claims. So our recommendation is to screen your exporters regularly. Inform exporters about financial implications of abandoned cargo or cargo misdeclaration cases. Usually freight forwarders don't want to entertain these negative discussions, but this can be done in the form of checklist or an email alert you send to all your exporters that in case your consignee does not pick up cargo at the destination, you as an exporter or a shipper on the bill of lading will have to bear all costs. This is an educational way of maintaining relationship with your exporters, but this also helps in case of a consignee at the destination disappears, or your exporter, for whatever reason, misdeclares cargo at origin. It does not cost much, actually does not cost anything at all to update your shippers regularly on estimated time of arrival at 3 days at destination, or offer them some tools where they can access and to check this information themselves. Knowing exact time of arrival, a receiver at the destination can plan pickup better. This way can be avoided demurrage claim, detention claim, and freight forwarder offering or alerting about these problems to Indian exporters really bridge a knowledge gap which exists today. And we recommend always act proactively. There is never too much of communication that freight forwarder sends to exporter regarding their specific shipment. The communication chain that you maintain with your exporter acts as a valid evidence to prove to shipping line that you acted proactively in case of abandoned cargo cases. So what is next? We recommend SOPs, simple, free of charge, a little bit better organized documentation that you have today. So we encourage freight forwarders to have a same claim submission process for every cargo, every time, regardless of client, regardless if it is volume client or small client, regardless of claim amount. I always say, if exporter does not pursue $300 claim, they will never be successful to recover $300,000 claim, because they have no processes, they have no evidences. And now you as a freight forwarders, you know this is the truth, and you don't want to be caught in the middle with high value claim, knowing that this exporter forever has been unorganized and they do not have evidence to prove their claim. It is important for freight forwarder to manage exporters' expectations. We still see today exporters who allege that we give volume cargo to freight forwarder and we don't have any claim supporting document or most claim supporting document to prove our claim is genuine. And these exporters use this power to do not pay freight or freight forwarders and keep asking freight forwarders for payment which is not due for them. For example, we have some freight forwarders who have exporters, and exporters don't have basic pre-shipment evidence. Who do not have pre-shipment evidence to prove that cargo was loaded in sound condition actually. And they tell, I am big exporter, you freight forwarder need to pay my claim, I don't have evidence that my cargo was in sound condition, but you still have to pay my claim. So failure to manage expectations. When cargo is damaged in transit, manage exporters' expectations, leads freight forwarders to lengthy discussions, lengthy disputes with your exporters, financial losses to yourself, which can be absolutely avoided if at the time you accept booking, you send a very short list of SOP. That's what, dear exporter, you need to do in case you want to submit a cargo claim to us. And once again, freight forwarders are not cargo claim handlers. They are not lawyers versed in all global jurisdictions. But they have power, in particular those freight forwarders who issue house bill of lading. They have a power to assign claim recovery rights to exporter directly. So exporter can pursue shipping line directly themselves. Exporter can appoint cargo claims recovery companies such as Recoupex to pursue their claim on their behalf. But offering solution allows freight forwarder to maintain a relationship going. An exporter feels that their claim is taken care of by the professionals. I know that it was many topics that we covered today in this master class, and some of you took notes, some of you maybe took decision to discuss with your team, but the biggest risk is we go back to office and day-to-day business operations kick in and we forget what we need to do or where to start. Because this is a room and your association is change makers and decision makers, I would like to encourage you to take a first step. We have prepared the claims documentation checklist, which you as a freight forwarder can share every time with your exporters when you accept booking. This document will guide your exporters to know what they need exactly to submit in case of cargo damage. It will set their expectations towards a freight forwarder, but it will also help reduce financial exposure to you because you know that exporters' expectations are managed and they have documents to pursue their cargo claims successfully without freight forwarders' interaction. So we offer this checklist to all masterclass attendees free of charge. Feel free to send me email and my team will get back to you with the template that you can adjust to all your SOPs. Before we wrap up this masterclass and go to a question part, I would like to ask Chairman to join us.
Dushan bhai, so we'll just request our chairman to share a few words.
Promote to panelist करना, right click,
No, he's panelist.
right click करना, three dot ऊपर.
Dushan bhai,
To unmute.
request you to unmute, please.
Yeah.
Till that time, only question answers. Please.
Yeah, thank you, Lina. It's been a wonderful presentation, insights, and you really cleared the myths that we had in our minds. We want to ensure that you give us this presentation, you give us that checklist which you prepared, and we will connect with you. Our members will connect with you. We want to educate them, take help of your services wherever required. But this is a very crucial aspect because we don't know exactly what we are getting into when we are handling such products. So, friends, members, I believe that all of us have enriched ourselves substantially in this aspect. Presentation given by Lina Justin today was wonderful. You explained it very well. And I think that will go a long way. Thank you. And thanks to our immediate past chairman, Mr. Shankar Shinde, Mr. Chairman-elect, Mr. Amit Kamath, Mr. Tej Contractor, our IFF president, and Philomena Pereira for being there, hosting you out there with the secretariat. Thank you.
Thank you very much, Dushan bhai. We will now move to question and answers. May I request everyone, if you have any questions, please put them in the Q&A section of the session. So once again, I repeat, if you have any questions, put them in your Q&A section. So we have one question, Lina. It says, if we have issued a house bill of lading and the cargo has gotten damaged in transit on the vessel, then who will be responsible to pay the claims?
Legally, freight forwarder is responsible because freight forwarder issued a carriage contract via house bill of lading, and he is a carrier to the exporter. That's why I shared during this presentation how freight forwarder can legally bypass or be less exposed to these cargo claims. Freight forwarder can assign recovery rights to exporter to pursue directly vessel owner. So it can be a biggest shipping lines, it can be another NVOCC, but by assigning this right, freight forwarder gives opportunity to exporter to carry on with legal dispute without involving freight forwarder. Otherwise, if you do not offer this solution, your first point of contact, your first connection will be always to export, and they will always come with their cargo claims and financial requirements directly to freight forwarder. So this is risky, and that's why, to add on top of this question, I see time from time freight forwarders who try to entertain claims with exporters, either to reject, either to negotiate directly with shipping line. I regularly see failing because the freight forwarders do not have legal knowledge how to wrestle with a vessel owner of a major shipping line on a legal ground to recover your exporter's claim. I really encourage, don't get into offering legal services in addition to your freight forwarding services, and rather choose to assign recovery rights to your exporters. Give contacts of major shipping lines with whom you have master bill of lading. Let exporters know that there is legal service to protect themselves, or they are free to choose any other legal advisor to defend their claim, but from the carrier, not from yourself.
Thank you, Nina. So in continuation, there is another statement that's been made to this question. The carrier is really responsible, but since the house bill of lading is of the forwarder, how can the forwarder transfer liability to the carrier?
Freight forwarder has a contract with exporter, and then freight forwarder has a second contract with a bigger shipping line, let's say Maersk. Freight forwarder is in the middle and has a recovery right if claim paid to exporter from the liable carrier Maersk. So the claim chain would be freight forwarder pays claim to exporter, and then they can recover from Maersk. We offer an easier solution. Instead of paying a claim to exporter, you can assign recovery rights to exporter to go directly after liable carrier. So that is a legal chain widely applicable by industry and Indian freight forwarders who already cope with this issue.
Thank you. So effectively, one can subrogate. So if you pay out a claim to your to the forwarder, to the exporter, then you can subrogate the claim effectively, and take up the matter with the carrier. We move on to our next question. In case of an import FCL, the carriers insist to arrange for container insurance. This is a question more on the equipment. From the container freight station to the factory, and the empty shipment has the empty box has to be returned. In this case, the same is not covered in the regular policy. How can a logistician or a custom broker or an importer protect themselves in this case? Because normally, just to give you a practice, in India there is a small $1 or $2 empty cover policy, which is a Class C policy, which is taken. So in order, and when the container comes back, then we have a problem because the shipping line will say there is an issue with the equipment and your cargo has damaged it. How does one protect themselves against that?
So you as a freight forwarder, you encourage your clients to take insurance. We cannot force them to take insurance. It's a right to insure or not to insure. And legally, we cannot push them. But you as a freight forwarder can alert about the problem, that to cope with costs, you better pay a few dollars and have this insurance. But if container or equipment is not insured and it is damaged, then freight forwarder goes after client for recovery, because shipping lines will issue invoice to you.
Thank you. Can you go down, please? So we have another question. Hi, I as an exporter exporting cargo on FOB Nhava Sheva basis. The container is stuffed in the factory 100 kilometers from Nhava Sheva. The container was not opened at Nhava Sheva. My responsibility is over at Nhava Sheva. After loading the container on the vessel, if cargo is received at destination in a damaged condition, proved whether the cargo was damaged in India before loading on board, or did it get damaged in transit?
Great question. It depends on the nature of the damage. So that's why when I tell to you as an exporter that you need to have evidence that you loaded container at your warehouse in sound condition, take 5 pictures with your smartphone proving that it stuffed properly, that it was a secured cargo in a container before sealing, you have evidence in case of cargo claim, or in case your buyer will complain, will be not satisfied with cargo condition at the delivery, you will have evidence that at origin you did everything properly. And in case it will be shipping line's responsibility, you will still need the same evidence to put a blame on shipping line to win your recovery.
So in continuing this, I think if you could share with them, the liability, and this covers the next question as well. So if you have a carrier bill of lading, what is the liability of the carrier in case of, a multimodal move, and in case of a unimodal move, and in case of a freight forwarder as well? What is the liability that you carry? Maybe the special drawing rules.
Okay, so here there are maybe two main distinctions. Let's talk about freight forwarder's house bill of lading. Liable carrier is mentioned in house bill of lading, so we already know that it is freight forwarder. Now let's look at the time frame. So was it freight forwarder in charge of pickup from the warehouse until the port of loading, and then it is listed port of discharge? If it is like this, so it means that freight forwarder's liability is from your warehouse in India until the final destination overseas. The same is for a master bill of lading. So if Myers does a pre-shipment from your warehouse in India, and they are in charge of ocean transportation as well, so they will be responsible for the whole chain from the time they picked up your cargo from the warehouse until delivery to the destination. If in the bill of lading it is mentioned that it's Nava Shiva Rotterdam, it means carrier's responsibility is only Nava Shiva Rotterdam, and some other tracking company or some other maybe local freight forwarder did inland transport for you. So if damage happened during inland leg, it's inland transporter's responsibility. If damage happened during sea leg, it's sea carrier's responsibility. How can you know where exactly damage happened? Depends on a claim nature, but also if you have evidence that you as exporter handed over cargo in good condition and it was received damage by the port of loading, let's say it was received damage, right? So you know that it was inland transporter's responsibility.
So taking that cue under, multimodal transport, or under, a damage established by sea, could you share with everyone what is the liability of the freight forwarder and what is the liability of the carrier? So in terms of special drawing right, like 2 or 2.5, under which convention?
Legally, carrier can limit their liability. So they don't pay in always invoice value in full. So if cargo is damaged by sea, carrier can apply limitation. So it is by kilo or by package. So this limitation goes like this: 2 SDRs per kilo, or 666 SDRs per package. And usually this limitation or the payout is always less than the commercial value. But there is interesting hack, which I will share with all attendees of this masterclass. I recommend when you manifest cargo on a bill of lading or house bill of lading as an exporter, instead of listing it as 2 pallets of cargo or 1 pallet of cargo, list 3,000 of cartons, because legally you have the right to decide how you name your cargo, and you have the right to tell any smallest parcels in which your cargo is actually packed. So it's totally legally compliant, and it is okay to say that I shipped 3,000 thousands of cartons of shoes, for example.
So not one package, 3,000.
Correct.
3,000
Always
boxes.
3,000, exactly.
So that's a really good piece of advice. Thank you very much for sharing. We move on to the next question. In case the shipper has not insured their cargo, and I would request everyone to ensure that their shippers insure their cargo. But just in case they haven't, can the carrier reject the claim if the cargo was damaged due to carrier's negligence or a malfunctioning container during transit?
All right, so here is, let's make it super clear to everyone. To insure or not to insure, it is exporter's right. They do whatever they want. You as freight forwarders make a recommendation to insure. Carrier's liability can always be imposed for reefer malfunction, for cargo mishandling in transit, and carrier bears liability to pay cargo claim regardless if cargo was insured or not insured.
Thank you very much. We request Shankar Bhai to ask a
Thanks, Lena. Wonderful presentation. I have two questions for you. First question is, as an MTO freight forwarder, we usually insure our bill of lading. And when it comes to claims, it just becomes a piece of to put it as and it doesn't really help to claim. So what do you recommend that what type of insurance we should be covering, and what should be the coverage of such type of insurance to have that claim valid?
For freight forwarder, you don't have many options. So you have first option to ensure that all your exporters have documents to pursue recovery themselves. This way you assign recovery rights for them to go after a reliable carrier, and you have your liability insurance for yourself, for big cases, for general average cases, for the claims where exporter is really not successful with their claim. And there is no third option for you to defend yourself, just being proactive in those two options.
Thanks for that. So we now understand what should be the precautionary measures as a freight forwarder for the bill of lading. Going ahead, today, without even having the house bill of lading or the freight forwarder bill of lading, we do back-to-back booking for the exporters, issuing in the master bill of lading. And when the cargoes are unclaimed at destinations, the shipping line comes back claiming it from the forwarder, saying that you have booked a cargo, there is no claimant over there. Now you pay the money for that, whether it is freight, whether it is detention, or anything of that sort. So what do you recommend, like what precautions can be taken on that, or whether it is right truthful, whether they can claim it from the forwarder, where there is no bill of lading existence or there is no contract?
Legally, if you act as a freight forwarder or as a booking agent, you are responsible for all the costs at the destination to shipping line. Shipping line, it is true that they come after freight forwarder to recover losses because they have contact with freight forwarder, and they know that freight forwarder has more money than consignee who disappeared or shipper who also disappeared. So you are exposed. The issue I see this solving that our clients do is they have evidence to prove to shipping line that we as a booking agent or as freight forwarder, we were very active in our KYC policies, that we screened our shipper. We checked, we have a processes in place to check that shipper is really actual business. When cargo arrived at destination, we send free notifications to our shipper, encouraging receiver to come and pick up cargo at the destination. By showing this correspondence to shipping line, you prove that you acted proactively to mitigate losses. And then in return, you ask shipping line to waive this cost and not to pursue freight forwarder for a recovery. Because consignee, let's say, is a scammer, which is outside of your control. But to get this waiver, you must prove to shipping line that you acted really proactively as a freight forwarder. Otherwise, for shipping line, it's the easiest target to come after freight forwarder for all costs.
But our experience has been irrespective whether you have all the KYCs, we do all the KYC due diligence, taking all the precautionary measures. Where the exporter says, my job is done, I had a booking, I have sent the cargo over there. And now if he is not claiming or if it is something of the other, I am not responsible for that. Now when we say no to shipping line, either they blacklist us or either they hold our another cargo. So how ethical this is for them to hold or do such type of.
No, shipping line will never, rarely blacklist you. In particular, if you are in a recurrent business, so don't be afraid, shipping lines will not blacklist you. It can be one case, one night, freight forwarder, so then a shipping line knows that it is a scammer. But usually they don't go with the first abandoned claim to blacklist you. For cost, you are exposed. So in these instances, where you really prove the KYCs, you prove that you communicated to export, you threatened the exporter, come pick up cargo, organize your receiver at the destination, otherwise cost and demurrage are escalating. And if it does not work, the last option for you is to challenge your liability insurer. Have liability insurance coverage for abandoned cargo cases. And when nothing works, you ask your liability insurer to cover these costs.
If there is any other questions.
Yes, thank you very much. So this is one question that we face locally. So when the shipment arrives in the CFS, there's two options. We can take we destuff the cargo in the container freight station. So the shipping line, before they give us the delivery order, they ask us to give an indemnity, stating that if there's any damage, you will be liable for it and the shipping line will not be liable for it. Is that a fair practice, and how do we protect ourselves against that? Do you understand?
Yes, I understand very well, and I know that a lot of companies in India sign these indemnities. I say, if you can not to sign, please don't sign, because it will always go against you. Shipping line use this practice, in particular also for export cargo. So not only for this, but also for export cargo. They push even pre-empty list without sometimes vessel name, without date of loading, asking exporter, just sign this indemnity and then we will load one day. It's very risky, because what happens is you sign and shipping line has all waiver of liability. So I recommend not to sign. And if you really are forced to sign by some shipping lines, ask your truck driver before they sign to do at least visual inspection that container seemed in sound condition. Of course, we never know what is inside, but if you do an inspection from outside, very quick one, it can give a good idea if cargo was delivered in sound condition or mishandled.
Thank you. So we have one very interesting question. Can we mention the export invoice value on the bill of lading and take insurance cover from shipping lines to avoid hassles?
These are two questions. You can mention whatever value you want. You have to bear in mind, when a cargo claim arises, shipping line either apply package limitation, but now you know how to manifest cargo, so package limitation will not be applicable. And then shipping line, if they are forced to settle your cargo claim, they will look at the commercial invoice value. So it's up to you to decide what amount you insert in the commercial invoice. The second part of the question, what was the second part of it?
The second part of the question is basically, can you go up? So the second part of the question is that, can you take insurance from the shipping line?
Okay,
and
I
put
get
the
it.
value on the bill of lading?
I do not recommend taking insurance from shipping line, and I will tell you why. Imagine you go to cafeteria, right? And you order coffee, And before waiter serves you coffee, they tell, buy insurance for coffee, so I will not poison you. So you will be covered from poisoning, right? So this is the same rule applies to shipping line. They have legal responsibility to act diligently and to ship cargo in the same condition that they received from you. To pay them extra money to do the core service does not make any sense. One reason. Second reason, the same person who handles claims at the shipping line on a regular basis, who is slow, sometimes unresponsive, he will be handling your insurance claim. So it will not necessarily be faster, it will not necessarily they pay your claim in full. You will have to go through the same hassle. So that's why I do not recommend paying twice to shipping lines. You have to check insurance coverage based on your cargo nature, on the countries you export, and on the risk your specific cargo incurs in transit. So for example, from trustworthy insurance providers. So if you ship fresh produce, make sure there is delay clause involved, make sure there is a reefer malfunction risk involved in your insurance policies. Don't run or don't blindly listen to insurance brokers that this insurance always pays everything and you are covered. And when there is a damage, you find out that actually there are too many exclusions and you are not entitled to payment. So I recommend if you have to buy insurance, buy from trustworthy insurance providers who have clear settlement terms and who offer coverage for your specific business case.
Thank you. We have now a very detailed question in terms of calculation. So as per the carrier, the liability is 2 SDR per kilo or package. The break bulk, there's a break bulk shipment, which is one package, 50 metric tons or 50,000 kilos. The value of the cargo is $80,000. As per the carrier, 2 SDR per kilo, 1 SDR is equal to USD 1.33. Therefore, as per the calculation, the liability is 2 into 50,000, so 100,000, and 1 SDR equals 1.33 USD, so it works out to 133,000 USD. Is the calculation correct?
I have to check to answer this question specifically, but as a starting point is that if cargo was not loaded in container, package limitation is not applicable. So for a break bulk, there is no limitation. It goes down to invoice value.
Thank you for answering that. So you can always write to Lena. She had given her email address in the presentation for a specific question. Mrs. Pereira has a question.
One question: export cargo stuffed in the container freight station. Okay. House bill of lading issued, which mentions, of course, the shipper store load and count. The container is shipped, and when the consignee takes the delivery of the container, and it is de-stuffed at their warehouse. And after that, the consignee comes back to say, so many packages are missing. You have taken precaution to do the survey. I mean, you have a survey report here saying that so many packages are stuck. You have, in case of count of the packages, I mean, photographs do not support, but you still have the photographs to support the nature, the package and the cargo. How do you address this? At the other side, they said, no, you pay, this many packages are short and you pay. They just offload it, and after a few days come back, or immediately after 3-4 days, so much package is short. And you have a relation with them, and you have this fear of losing business, you've been with them for so long and things like that. I mean, what do you do?
In shortage claims, a receiver must prove if seal was intact when they received it. So if you have evidence, photographic, that you stuffed cargo in full, You have pre-shipment survey report or tally that shows that this number of bags were stuffed at origin before sealing, and container arrives with the same seal to the destination, then no exporter can claim unless they prove that doors were manipulated. Then it's other part of the story. But if container seal is intact, they cannot submit a claim to exporter for shortage. So these are two indications. You have evidence that you stuffed everything. You have VGM as well. It works in shortage claims. And in the third place, they have to prove that they received a container with missing bags, without seal, or with a seal tampered. Only then they can claim shortage. Otherwise, they cannot submit a claim to you as an exporter for shortage.
Not towards the exporter, towards the person who has issued the bill of lading, master.
Yeah,
And the
so
house bill of lading, yeah.
to carrier as well.
Principle of
Same principle,
subrogation.
yeah.
If seal is intact at destination, they
No, but
cannot
that is the
submit a claim.
pressure that they, use, as I've already mentioned, that it's a relation and the shortest way they adopt this. But I don't think anything else can be done further than, you have your tally and everything is in place.
VGM, you
Yes.
have, and I want to tell one thing which is very important with commercial pressure. In particular now with Russia, we see happening and all the constraints in supply chain, there are a lot of malicious overseas partners who first test you with a very small claim. Pay this, otherwise I don't ship. You make a commercial gesture, give discount. The next time you ship, claim amount increase. And the next time you ship, they don't even provide evidence, but they keep claiming. So these are very bad practices which you educate your exporters how to treat you as well. So going back to shortage claim, if you have VGM, you have staffing pictures, and they do not provide you any evidence that container seal was tampered.
The consignees, your
Exactly.
price consolidation.
But they have-
consignee claims, puts a claim on you. That
Exactly.
so many packages are short. They've just taken the container to the warehouse and offloaded, and God knows where they have put the packages.
Exactly.
And at some point of time, they say.
So
this
if they don't prove
Yeah.
that seal was tampered, doors manipulated, you don't entertain these claims. Very nicely, professionally explain the reason why their claim is rejected.
Okay, so we'll take one last question and then we'll take everything offline. So after giving all the documents in respect to the claim to the shipping line, is there a time limit that the carrier has to settle that claim in, or can it extend beyond a regular period of time?
After you submit all claim documents to shipping line, you have to be very proactive and to follow up with a carrier on a regular basis. Claim will be time barred 1 year after day of delivery. So it does not matter when you submitted your old documents or when you received your first rejection or first settlement offer. Carrier always counts time bar 1 year after day of delivery. And carrier has intention to drag your claim into the time bar. So never assume that I submitted claims and now I patiently wait for resolution, that they will come forward proactively with your money. It's your obligation as an exporter to pursue shipping line proactively in a meaningful manner, constructive manner, to ensure that they pay your claim. Otherwise, you can ask them for a time extension. But if you miss the time bar and you don't ask for time extension, your claim is lost. And we have seen many claims go down the drain just because exporters patiently waited and expected, and then nothing happened.
Thank you. That's very, very
Yeah.
important. So 1 year is if once your date of delivery has been has gone. 12 months if you don't receive a claim, the likelihood of you receiving it reduces significantly. With that, I would like to request our chairman-elect Amit sir to please share a vote of thanks.
Thank you, Tej, and thank you, Lena, for the wonderful presentation. It was very elaborate, and you touched on all the major concerns that our members who are custom brokers and freight forwarders would have in this respect. And for the members, I hope and believe that this presentation was insightful, uh, and most of your queries and concerns would have been resolved. For any further queries you need clarification, Lena has shared her email address in the presentation, and you could get in touch with Lena, and she would be happy to assist you in this regard. Lena, thanks again for your wonderful presentation, and thank you all members for the interest shown in the various knowledge series, which is the initiative and endeavor of our federation to share more and more information, knowledge, and assist our members in this regards. Please share your feedback on the presentation, and we're happy to serve you better. Thank you so much.
Thank you. Have a good
Thank you very
weekend.
much.
Thank you.
Thank you.
Right. This is
Thanks.
Shankar Bhai,
Bye.
Mr. Shankar.
How are you?
It's Sudhir from RE Rogers.
Yeah.
Thank you.